Good day to all. Today's topic of presentation is on tax-free incomes. The course name is Direct Tax 1, Unit 3. This is for the BCom students of Mangalore University. We have already discussed about agriculture income, which is covered under Section 10, subsection 1. Share of income of members from the Hindu undivided family business, covered under Section 10, subsection 2. Share of income of partners from the firm, Section 10, subsection 2A. Now, in Section 10, subsection 2 and Section 10, subsection 2A, it is exempt from tax for a simple reason is the Hindu undivided family business as well as the firm pays tax on its income. After payment of tax on its income, the balance of the amount is distributed among the members of HUF or distributed among the partners in a firm. Hence, share of income of members from HUF is exempt from tax under Section 10, subsection 2, and share of income of partners from the firm is exempt under Section 10, subsection 2. Let's move on to the next concept. We have leave travel concession. Now, this is covered under Section 10, subsection 5 of the Income Tax Act of 1961. This concept of LTC is basically applicable for government employees. This amount which is exempt is basically the amount spent for the purpose of travel. LTC for himself and or his family to proceed on a leave to any place in India. Point to be noted is any place in India, not outside India. So, leave travel concession is the exempt amount which is incurred to proceed on leave to any place in India while in service or after his retirement or termination from service. So, whatever is the travel cost to any place in India is exempt from tax. But there are related issues connecting to this. The exemption is available to an employee in respect of 2 journeys for a central government employee in a block of 4 calendar years, that is January to December, starting from the year 1986. Whereas for a state government employees, it is once in a lifetime. Now, what do you mean by family? Family for LTC encompasses spouse and maximum 2 children and dependents. Interesting point to be noted. Multiple birth after the first child is considered as one child for the sake of leave travel concession. Next, covered under Section 10, subsection 7, is foreign allowance and perquisites received by an Indian citizen serving as an employee of the Government of India outside India. So, if there is an employee of Government of India working on a diplomatic mission or is serving in the consular office outside India in any other country, then whatever are the foreign allowances and perquisites that the employee enjoys, such allowances and perquisites are totally exempt from tax. Coming on to the next very interesting and very important concept on death cum retirement gratuity. Now, this is covered under Section 10, subsection 10. The word gratuity is very close or derived from a word called gratitude. So, gratuity is the amount paid by the employer to his employee, normally on retirement or on his leaving the job as a gratitude. So, what do you mean by gratuity? Saying thank you in monetary terms for the valuable service he or she has rendered to the organization. So, payment made to an employee as a matter of gratitude for the yeoman service that a person has rendered to the organization is treated as gratuity. Now, what are the rules for gratuity? That is what we need to understand in this concept. Now, it depends whether we are taking up the gratuity amount while we are in service or whether the gratuity amount is received at the time of retirement, resignation, termination, or death of an employee. If it is received while in service, gratuity amount is fully taxable. But if gratuity amount is received at the time of retirement, resignation, termination, or death of an employee, depends on whether the employee is a government employee or whether he is a non-government or a private employee. If the employee is a government employee, then the amount is fully exempt from tax. But if the employee is a non-government employee and is receiving gratuity at the time of retirement, resignation, termination, or death, then these are the rules. Again, we talk about a non-government employee, whether he is covered under Payment of Gratuity Act or whether he is not covered under Payment of Gratuity Act 1972. Now, if we compare these two, there are three important criteria as specified over here. And among the three, the first two are the common ones. So least of the following will be exempt in each of the cases. It is actual gratuity amount received, which is common under not covered concept as well. Then we have the statutory limit of rupees 20 lakhs. Similar, same amount in not covered concept as well. Now, as far as covered is concerned, the third criteria is 15 by 26 of monthly salary for every completed year of service or part thereof exceeding 6 months. If an employee has served in an organization, say for 20 years and 7 months, then for the computation of gratuity, it will be considered as 21 years. But if the employee has served for 20 years and 5 months and some 14 days, then it will be considered as 20 years only. So, part thereof exceeding 6 months would mean if an employee has served for 6 months and even 1 day extra, it will be considered as the next full year for the calculation of gratuity. Whereas in case of not covered under Payment of Gratuity Act, the third criteria is half month's average salary for every completed year of service. Point to be noted, for part thereof exceeding 6 months is not found in this particular concept. Now we have the term average salary. So under the concept of not covered under Payment of Gratuity Act, average salary would mean salary of the last 10 months preceding the month of retirement. Salary of the last 10 months preceding before the month of retirement. Say, for example, Mr. X has retired on 1st of January. So, till December and the earlier months will be considered. Suppose if the person has retired, say, on 31st of December, then December month will be excluded and November and the earlier months, in total 10 months, will be considered for the calculation of gratuity under not covered under Payment of Gratuity Act. Now, what is the meaning of salary for computation of gratuity? Depends on whether the employee is covered under Payment of Gratuity Act 1972. If the employee is covered, then the salary concept will include basic plus DA. No conditions attached for DA at all. DA is simply included in the calculation of salary for gratuity. If the employee is not covered under Payment of Gratuity Act, then there are three important aspects that go into in the making of salary. First one is the basic one. Second one is DA. DA, there is a condition attached. DA will be included only if it is given under the terms of employment or it enters into retirement benefits or is included for superannuation benefits. Superannuation benefits is nothing but retirement. And the third criteria that will be included is commission, which will be paid as a percentage of turnover. So important difference we need to understand. If the employee is covered under the Payment of Gratuity Act, it is simply basic plus DA, no conditions attached for DA at all. And point to note, there is no commission here. Whereas if the employee is not covered under Payment of Gratuity Act, then the three criteria we have basic, DA. It will be included only if it is given under terms of employment or it enters into retirement benefits. Similarly, commission. Commission will be included only if it is paid as a percentage of turnover. If simply the term commission is given, percentage of turnover is not given, then commission will not be included in the concept of salary. Now, two important points that we need to note in case of gratuity. Gratuity amount, if received from a former employer and exempt, then must be deducted from the statutory limit of 20 lakh to find the exempt amount at present. For example, we talk about Mr. X as an employee, and suppose Mr. X had retired from another firm previously, say 4 years ago, and gratuity was paid to him. And that time, the gratuity exemption amount, let's say, was 2 lakh rupees. So when same Mr. X is retiring in a new firm in this organization, say after 10 years down the line, the 20 lakh rupees statutory limit will be reduced by 2 lakh rupees, and 18 lakh will be the statutory limit available for computation of gratuity. Gratuity is usually paid after the completion of 5 years of continuous service, except in case of termination, permanent disablement, or death before the completion of 5 years. So, if the employer is making the payment before the completion of 5 years, it is out of the goodwill of the employer, goodwill of the employee for the service that he or she has rendered. So, that's all for this particular. Thank you.